Again, as we start the new year, I always like to start from a real top-down perspective and take a look at some of where the key markets are. And let's just look at the S&P 500 from a very long time frame. And what I've shown on these three charts that you're looking at here is a 10-year, a 3-year, and a 1-year chart, respectively, on the S&P 500 futures. And really, the reason why I want to start with a real top-down picture is just to see where we are. I like to see who's in control of the market, where the trend is, you know, how we've been trading. And again, this is a real big picture. This is not for a intraday or a trading perspective, but this is really to give you an idea of where the market's been, not necessarily where it's going, but where the strength in the market is, who is in the strong holders and the weak holders in this market. So let's take a look at it as we trade here. 1445 up 25 points on the first day of the year after the fiscal cliff, up 1.8%, yet down from the open on the short term. So all that aside, let's look at the really big picture, and let's start at a 10-year chart. Yes, our highs for the 10-year were set back here in 07. Those were set, excuse me, right in that period of September of 07. We hit 1587. We went from 1587 all the way down to 666, as we all know, that number. And now we're back to almost the high of this move, which was 1470 last year, in the 2012 trading at 1445 right now. But one thing I'll notice when you start to really look at the profile in the longer term chart here, you'll see that the range is really between these two yellow marks, 1025 and 1445. So we're near the top end. Without more stimulus and without more intervention, I don't see a lot to move this market beyond, say, the 1586. That being said, you have to respect where the market is always in the now, and right now we're well above value, which again on the 10-year chart is somewhere around the 1290. So we're above value, so very bullish. The longs are definitely in control of this market and have been now going back almost 4 years. So this market has been in a bull run for 4 years. You can really see, outside of a couple shakeouts, one here, we haven't had a shakeout, a little minor shakeout, but we've been really nothing but in the uptrend really since that March in August of 09 was really when this monthly chart said you don't want to be short anymore. Once we bounced to this area, you wanted to be short. So you did not want to be short. So again, above value where I'd want to be a buyer. If you're long, it's great to hold on to this market, but you also have to think about areas to protect yourself and take profit on the long-term charts. Now when it comes to the 3-year, you can see this again a little bit more clearly. Again, the trend is up. We're still in an uptrend, very long-term. And this is a nice chart for the bulls. Again, you can see the shakeout show a little bit more clearly in the weekly chart. There was one here, and a small one here, but we keep holding, really above the 50-day or the 40-day moving average, which is this red line that you see in here. But again, on the profile, we begin to see a little clearly where the strong hands are. And although the bulls are in charge, you're going to need something more, if you will, to take this market higher. That can't be foreseen. It's not that we can't get above the high of the last 3 years, which is right here at 1470, or even touch this 1586. But the value area is somewhere still around 1320. We haven't been back in value on a weekly or a monthly chart in quite some time. Almost a couple years, I think. When you look at least early last year when we kind of touched down that late in the week. So late last year at 12, but we haven't spent much time below value at all really since mid-11. And then when you come to the daily chart, again, value area right now is at around 1401. So we're well above it. Probably if you're not involved in this marketplace, hard to chase a market that's 40 points or 3.5–4% above value. Again, it's not saying that we can't go higher, but if you have a long-term perspective in this market, we've had a huge run. Again, who knows if we can't go higher, but from a trading perspective, this is what the long-term charts look like, and this is something that I start with before I get into the midterm, which is a 4-hour, 1-hour, 30-minute chart, and then the real short-term 15, 5, and 1-minute charts are what I look at every day when I begin my trading day. So these charts on the longer-term charts don't change that often, but they give you a perspective of where the market is right now, how long it's been in this trend, and you need to know this before you look into your positions. This sets the shorter-term charts as you go forward, and again, just kind of tells you where you are, gives you a roadmap. And again, we are above value in all the long-term charts. Probably not an area to be chasing after a 4-year run. Doesn't mean we can't go higher, but from a trading perspective, this sets the precedent for everything else that you're going to do as a trader.